This is Brad Sanders, and this is your investment update for August of 2019. Had a very volatile month in the equity markets last month. The S&P 500 finished the month down 1.6%, and global equities were down 2.4%. And coinciding with that, we had a really big rally in rates after the Fed cut rates in July. Our domestic bond markets were up about 2.6%. Global bond markets were up 2%. And you had the 10-year Treasury hovering between 1.5% and 1.6%. So a big rally in yields there. The market is very volatile day to day, and it's either it seems like it's either a have or have not market. You're either up 1% or down 1%, and there's very little, very quiet days. We feel like for the balance of the year, that kind of volatility can be expected. It's becoming readily apparent that a deal with China might be farther off than they're letting on, and we've seen how that's caused volatility in the markets, and we would continue that. We would expect that to continue. And then with Fed policy, the federal funds futures, which measure market expectations for rate cuts or increases for the rest of the year, show that the market's already priced in another 0.5% cut. So either 2 more 25 basis point cuts like we saw in July, or 0.5% or something. So in our estimation, if the Fed were not to cut rates, then we could see further volatility in equities because they've already priced it in stocks in general, like interest rate cuts. Okay, they go up when they say that, and that's why when the Fed said they were going to cut, the market took off. So those two issues out there alone can cause a lot of volatility, and there doesn't seem to be any real resolution there. The Fed looks to be getting into kind of a tug of war between what's going on in the real economy and what's kind of politically expedient for them to do. And so that's kind of a weird spot to be in. So we think for the balance of the year, just kind of get ready for some volatility month to month and even week to week. And we feel like having risk management in place and being positioned in a way to try to avoid some of that volatility is prudent.